Hi, welcome back. And the next analysis type is vertical analysis. As the name suggests, it is like this analysis. And how can this analysis be possible? That is, suppose there is cash in company of rupees 20. Okay. And the total assets in company are of rupees 100. So this analysis will tell us that how much percentage of cash is to how much percentage of total assets is cash in the company. Okay, so this is 20% of cash of total assets is in the company. Okay, so basically this is the default percentage format of tally that I just showed you, if you remember, but if you don't remember, that is totally okay. Hence this is compared across here. Okay, they can, for a company, want to know how much inventory. Okay, yeah, if a company wants to know how much inventory contributes to total assets, accepted. Now this can be mostly used where, suppose in case of liabilities. Now a company wants to know how much outside liabilities is, okay, or liabilities, how much debenture outside, let's say for debentures. Okay, how much debentures does total liabilities constitutes of. Okay, so might be a good analysis for companies that wants to reduce an individual item from their balance sheet and learn about them. Okay, let's try to solve it first and then we'll know how to do it. Coming to this sheet right here, that is the comparative year-end balance sheet of Hallmark Incorporation. And right here we have to calculate common size. What is common size? You'll know soon. Okay, so I want to know how much percentage of cash, how much percentage of total asset is cash. Okay, so out of 2,50,000, cash is of 1,10,000. Hence, how much percentage does it comes to? Let's apply the formula. General, let it be equal to bracket this divide by the total percentage that we want to find out of into 100. Okay, hence 44%. Okay, so this is a sign of a good company because cash and cash equivalent is 44% of the total asset. Okay, now let's see what it wants to say right here. That is how, what can we analyze? Cash is the current year is okay, 40%. They would exceed expectation. They may not be enough for defense to make a change, but they make adjustments such as reducing amount of cash. Okay, suppose it is saying right here that if the company had an expected cash balance of 40% of total assets, then they need to understand that why it is 44%. Okay, I'll just remove this and I'll apply the Excel percentage thing so that it will show you percentage. Okay, yeah. Now let's solve for the other ones. That is, okay, oops, something went wrong. Now this divide by this. Okay, why did it come to 0? Okay, percentage applied. Let me apply percentage everywhere. Yeah, so accounts receivable is 12% of the total asset. Total asset. Okay, now one thing that you must be clear about here is that we are just comparing year with the year only. Okay, there is no previous year and current year comparison initially. And why am I doing it? Just because I don't want you to get confused. Okay, first let's calculate first for years and then we'll calculate for everything. Now I'll just copy it and see if it works. Oops, something is going terribly wrong. This divide by this, I'll press F4 so that this formula is fixed right here. And now let's see the Excel magic here. So the total of this will always come to, oops, how is it even possible? Yeah, because of this. Okay, so the total of this will always come to 100%. Can you see? If you cannot see, I'll show you. 100% is the sum. Okay, because we have calculated it out of 100%. Okay, let's not be a math geek and calculate the other ones also. This, now we have to apply a different formula, that is how much accounts payable is of total liabilities. Enter this. Now to fix that formula I have to press $sign, or you can just do it individually, it would be much easier if you don't know. And for this it can be this divided by this. Where are you? To enter the $sign, either you can enter dollar here between the rows and the columns, before the rows and the columns, or you can just click here and press F4. Control C. F4 will automatically bring in the $sign and affix this cell right here. Okay, the cell that is we want to be divided with. Okay, so yeah, now you can see, now this is completely independent to companies. Like if a company wanted the assets, that is, okay, if a company's policy is to always have 40% of fixed asset, that is 40% of fixed asset of out of total asset, out of total asset. Okay, total 100%. So as the company's policies have been violated, now there will be an audit, that why did this happen and whose permissions was taken and whose authorization was taken. Okay, this is how you do vertical analysis. Let's bring our boys back. Okay, and let's hide these boys. Hide. Okay, let's calculate for this one, that is this divide by. Okay, first thing that I have to do is percentage, and I have to apply font 20. Okay, now I'll put it everywhere so that, yeah, hence we are good to go. This divide by total of this. Okay, 45%. Oops, F2, F4. Yeah, done. Delete this, and again we have to apply that formula, that is this divide by dollar. Okay bro, sorry, let's not mess with Excel, otherwise it will get angry. B21, B $21. Okay, we are done. And this divide by this, you can hit F4. See, easy. Copy it. Okay, done. Now you can see right here that the company's policy is again violated. Suppose it is 40%. Okay, 45% is cash. Okay, 64% is total current liabilities. Now let's bring everything back. Okay, and see what can we analyze and learn from it. Okay, so our sheets are made, and now you can understand what vertical analysis is. That is common size of each and every balance sheet line item. Okay, so cash has made 45% in the previous year, now it is 44% of the total asset. Where there is big change, let's analyze where there is a big change. Okay, and I'll see if there's a way to do it. Plus this minus this. Okay, and 20. Oops, what bro? Yeah, good to go. Control C, and let's copy it everywhere. So let's analyze where there is a big change, that is above 5% or 5%. Right here there is a big change, that is stockholders equity has substantially changed 5%. That is, it was 45% of total stockholders equity, now it is only 40%. And let's understand the reason why by auditing. 6% of common stocks looks like they are sold. Okay. And accounts payable, that is, which was 55% of total liabilities, it is not only 100%, it is only 50% now. Hence this is a good sign. Okay, you can hide this, so can you can analyze more. So okay, this is how you analyze it. And yeah, we have done for the balance sheet. Now you can move on to P&L account.